Analysts expecting a bit of a slowdown in traffic this quarter, closely watching promos and those extra value meals. You're a buyer here. Why? Is that a bid on the consumer?
It is, and it's also a bid that where Chipotle loses, McDonald's going to pick up. People are still spending money. They're just being super choosy about it, and they want value. And McDonald's excels at value. Brought back the $5 meal. They got the buy one, get one for $1. They fixed their pricing a little bit, and they're selling a lot of chicken as well as burgers. And so I like McDonald's. I think they're going to get about $7.1 billion. I think maybe a little bit of U.S. slowdown could be picked up internationally. They have a massive presence internationally, especially in Japan and China, which I think those markets are going to help outpace. They also have Monopoly coming back, and they tend to do well with Monopoly and loyalty. So I think the stock could overperform here. I'm looking for it to get back to the 320 levels, back to their highs, because I really think as the consumer trades down a little bit, maybe a little less at Cava and Chipotle, a little bit more at McDonald's.
Very interesting. Of course, Chipotle didn't think that they were losing out to competitors, but maybe they are. We'll see what McDonald's has to say tomorrow on that monopoly. Does anybody ever win that? Anyway, next up, Norwegian. Shares down 15% on a revenue miss and lower fourth quarter earnings guidance. This is just the latest cruise line to fall following earnings. Royal Caribbean shares down nearly 19% since reporting last week. This one, Victoria, you're a seller.
I'm a seller here. I think this is going to retest the $15, $16 level, and there are a lot not to like under the hood there. They're trying to go into more family-friendly, which is a little bit lower margin. They're taking on a lot of debt as they expand their fleet. Their interest costs went up 200%, and they're also getting less on experiences. Experience came in at like $880 million, about $40 million light of where we wanted. That was a huge benefit to cruises, right? Not just for people cruising, but they were buying the drink package and the internet package and this upgrade and that upgrade. They were spending freely, and now with that slows down and they're seeing that their yields slow down, we're just a little bit concerned the stock is still pricey here, even with the fall off today. I'm just worried you got a little bit longer to leg down.
Ooh, okay. Wow. And forward PE ratio on that one is just 8, which is a far cry lower than some of those tech names we talked about earlier in the program. Finally, let's hit Shopify. So shares down 7%. Despite posting a 32% increase in revenue from last year, the company's operating income missing estimates, while transaction and loan losses more than doubled to $148 million. Victoria, what's your take on this one?
It's a buy for me. This is a growth shop. It's a growth stop. It's a growth stock, and it's going to have a little lumps. But this stock has done this about 3 times in the last 3 months. It's gone down about 9 to 11%, popped back up. Very strong uptrend, very strong support with the 50-day moving average. And it's a fantastic growth stock. We're looking at a really good Q4, and it's all about the AI integrations and ChatGPT integrations and the enterprise wins they're getting. They're expanding. They're making shopping easier. And their whole tagline on their earnings was internet everywhere. They're going to continue to pick up e-commerce business. So for me, the growth story is very much intact. If you believe in e-commerce, if you believe AI is going to change a little bit how we shop, Shopify is where you're going to want to be.